Hey you! Welcome back to part 2 of our series. Is it too late to buy Bitcoin? So you've learned what Bitcoin is, but now you're asking, wait, should I buy Bitcoin or real estate? Isn't real estate the safest investment ever? It's physical. It cash flows. Your grandpa probably told you to buy a house before you buy Bitcoin. With home prices sky high and tech moving fast, is real estate still king? Today, we're putting two heavyweights head to head. Bitcoin versus real estate. Let's break down the pros, the cons, and which investment gives you the most freedom and growth in the years ahead.
This is the digital revolution. No retreat, we are the movement. Building empires that forever last. We don't fold, we rise, we blast.
A quick snapshot, the two giants. Real estate and Bitcoin are very different, but both are ways people try to build wealth and protect against inflation. Let's start with the basics. Real estate versus Bitcoin. Tangible? Real estate. Yes, physical property. Bitcoin. No, fully digital. Cash flow? Real estate. Yes, if rented. Bitcoin. No, unless using DeFi tools. Inflation hedge? Real estate. Yes, historically. Bitcoin. Yes, due to limited supply. Initial cost? Real estate. High, often $50,000 plus upfront. Bitcoin. Low can start with $10. Liquidity? Real estate. Low can take months to sell. Bitcoin. High can sell 24/7. Maintenance? Real estate. High tenants, repairs. Bitcoin. Low, mostly self-custody. Both have pros. Both have risks. But which one is right for you? Let's give real estate the spotlight first. So, why people love real estate? Before crypto, before tech stocks, real estate was the way to build long-term wealth in America. And for good reason. Let's break it down. Pro number 1, cash flow from rental income. One of real estate's biggest strengths? It pays you every month. Buy a rental property, find a tenant, and boom, you've got monthly income coming in. For example, you buy a duplex in Atlanta. One unit rents for $1,800 per month. After the mortgage, taxes, and maintenance, you're left with $500 per month in profit. Multiply that over 12 months? That's $6,000 a year in passive income. This is why people call real estate a cash flow asset. It doesn't just sit there, it works for you. And in retirement, that kind of steady income can be huge. Pro number 2, leverage equals using other people's money. Here's a powerful trick. In real estate, you don't need the full amount to buy a property. You can put down, say, 20% and borrow the rest. That's called leverage. Let's say you put down $50,000 on a $300,000 property. If that home goes up to $360,000 in a few years, you made $60,000 in equity on a $50,000 investment. That's a 120% return thanks to leverage. In most markets, you can't do that with Bitcoin or stocks. Of course, leverage cuts both ways. If property values drop or your tenant stops paying, you're still on the hook for the loan. But used wisely, leverage is a wealth builder. Pro number 3, tax advantages. Real estate is a tax-friendly asset, especially in the US. Here's how. You can deduct mortgage interest, property taxes, and maintenance costs. You can depreciate your property, writing off part of its value each year, even if it's going up in price. You can use 1031 exchange to sell a property and roll the profits into a new one tax-free. All of this means you can earn income and appreciation and legally reduce how much tax you owe. Real estate investors play by a different rulebook, and the IRS helps them win. Pro number 4, tangible and physical asset. You can see real estate. You can live in it. You can drive by it. That makes it feel safer than something invisible like Bitcoin. In uncertain times, a physical house feels like a sturdy anchor. And for many people, their home is the biggest investment they'll ever make, and it gives them a deep sense of security. You can't live in a Bitcoin wallet, but you can build a life in a house. Okay, so real estate has serious benefits, but let's not sugarcoat it. It's not all cash flow and tax breaks. There are some real downsides you need to understand, especially in today's US market. What to watch out for in real estate? Con number 1, expensive to start. Buying real estate takes money, a lot of it. Let's say you want a $400,000 home, not unusual in many parts of the US. Even with a 20% down payment, you're looking at $80,000 upfront, and that's before closing costs, inspections, moving expenses, or repairs. On top of that, mortgage rates can climb high, which makes the monthly payment a heavy load. For most people, getting that first property is a massive financial hurdle. It's a long-term play, not a quick win. Con number 2, low liquidity equals hard to sell fast. Need cash quickly? Selling a house isn't like clicking sell on an app. It could take weeks or months to close, and that's if the buyer doesn't back out, the inspection goes smoothly, and the market is favorable. If you're in a rush or the market dips, you might lose money or be forced to sell at a bad time. Con number 3, active management equals time and headaches. Even if you hire a property manager, real estate isn't passive. Tenants don't pay, pipes burst, city inspectors come knocking, property taxes go up. You're responsible for everything that goes wrong because it's your property. It's like running a small business. And if you're not ready for that, it can eat your time, energy, and patience. Con number 4, geographic risk. With real estate, you're tied to one location. If the neighborhood goes downhill, the school system drops, or a new highway ruins your view, your investment could suffer. And don't forget natural disasters, floods, wildfires, hurricanes. Insurance helps, but not always enough. Con number 5, debt equals risky leverage. Remember how we said leverage can help you grow? Well, it can also backfire. If the market crashes or you lose your job, you're still on the hook for that loan. In 2008, millions of Americans found themselves underwater owing more than their homes were worth. So, while leverage can boost your gains, it can also magnify your losses. Scene 4, old playbook versus new frontier. So, real estate has its perks, cash flow, tax breaks, and a long history of building wealth. But let's be honest, it's also slow, expensive, and locked to one place. Today, the world's moving faster. Money is going digital, and the old rules, they don't always work in the new economy. That's why more and more people, especially younger investors, are looking beyond bricks and mortgages and turning to something borderless, scarce, 24/7. It's not land, it's not stock, it's not controlled by banks. Let's talk about Bitcoin and why it's becoming the new alternative to real estate. Why people are choosing Bitcoin. Pro number 1, Bitcoin is scarce, truly scarce. In real estate, people say, buy land, they're not making more of it. Well, guess what? Cities rezone, builders develop, land gets split. It's not actually fixed. But Bitcoin Island, there will only ever be 21 million Bitcoins, coded into existence with zero room for inflation. Every 4 years, the reward for mining Bitcoin gets cut in half. This is called a halving, and it makes new supplies slower over time. That's the opposite of the US dollar, which keeps expanding. And unlike gold, which is scarce but hard to verify, Bitcoin is digitally verifiable. You can prove it exists, who owns it, and how much there is instantly on the blockchain. That level of transparency plus scarcity, unmatched. Pro number 2, accessible to everyone. Real estate is expensive and exclusive. You need a big down payment, good credit, paperwork, a bank's approval, and usually a lawyer. Bitcoin? No barriers. Got $10 and an internet connection? You're in. Whether you're 18 or 80, living in Manhattan or Manila, Bitcoin is open to anyone. No broker, no gatekeeper, no discrimination. And because Bitcoin is divisible into 100 million sats per coin, you don't need to buy a whole one. You can start small, grow over time, and own exactly as much as you want. This is called democratized investing on your terms. Pro number 3, you own it, no middleman. When you own a house, your name's on the title, but the bank often holds the mortgage. The government can seize it, the city can tax it, and you still rely on external systems to prove ownership. With Bitcoin, If you hold the private keys, it's yours. Period. No one can freeze it. No one can take it. No one can block a transaction. It's like having digital cash that works globally, anytime, without permission. That's not just convenience, that's financial freedom. Pro number 4, no maintenance, no tenants, no toilets. Let's be real, real estate is work. Even with property managers, you're still involved. Tenants don't pay? That's your problem. Roof starts leaking? That's your bill. City reassesses taxes? That's your hit. Bitcoin? It just sits there. No repairs, no 2 a.m. phone calls, no city inspectors or HOA fines. You store it securely, ideally in a cold wallet, and it doesn't ask for anything in return. That means less stress, more freedom, and a completely different kind of ownership. Pro number 5, long-term growth potential. Yes, Bitcoin can be volatile. Yes, it crashed before. But zoom out and the long-term trend is undeniable. In the past 10+ years, Bitcoin has outperformed real estate, gold, stocks, almost everything else. Even after brutal crashes, Bitcoin has come back stronger. Why? Because more people adopt it, institutions are buying it, countries are legalizing it, and supply is capped while demand is growing. This is what investors call an asymmetric bet. Your risk is what you put in, but your upside could be life-changing. And in a world where fiat money keeps losing value, Bitcoin becomes not just an investment, but a hedge against the entire system. Okay, so Bitcoin sounds like a digital dream. It's scarce, accessible, borderless, and free from middlemen. But let's not romanticize it too much. Because just like real estate, Bitcoin has its own risks, and if you don't understand them, you could get wrecked. Before we crown it the king of assets, let's take a hard look at the cons of Bitcoin, the volatility, the learning curve, and the potential traps new investors fall into. This isn't about hype, it's about being smart. Let's flip the coin and talk about the downside, the dark side of the coin, Bitcoin's cons. Con number 1. Volatility equals emotional roller coaster. Bitcoin's biggest strength is explosive price growth, but it is also one of its biggest dangers. It's not like a house that grows 3–5% per year. Bitcoin can jump or crash 30% in a week. For example, in April 2021, Bitcoin hit nearly $65,000. By July, it was under $30,000. Then, by November, it went back to $69,000 before crashing to under $20,000 in 2022. If you're emotionally attached to your money, watching those swings can be brutal. And here's the worst part. When Bitcoin crashes, the media piles on. Headlines scream, "Bitcoin is dead." Everyone around you says you're crazy. That's when people panic sell. And most of the time, they sell near the bottom. So if you're investing in Bitcoin, you need to zoom out to the long-term chart. Control your emotions. And have strong conviction. Because volatility isn't a bug. It's the price of freedom and the price of early adoption. Con number 2, no cash flow equals no monthly income. With real estate, you can earn rent. With dividend stocks, you get quarterly payouts. But Bitcoin, it doesn't pay you anything just for holding it. You're betting that the price will go up, not that it'll pay you along the way. Yes, there are crypto lending platforms and staking tools. But they often come with extra risks, including scams, hacks, and companies going under. Remember BlockFi, Celsius, and FTX? So, unless you're a savvy user in DeFi or taking on extra risk, Bitcoin is a non-income generating asset. This makes it harder to retire on because there's no built-in cash flow. It's a buy and hold, not a buy and earn monthly. Con number 3, tech learning curve and custody risks. Bitcoin gives you full control over your money, but with great power comes a steep learning curve. If you self-custody, you need to secure your private keys, store your seed phrase offline, protect your device from malware and phishing attacks, understand what to do if you lose access. And here's the scary part. If you lose your keys, there's no one to call, no password reset, no customer service line. Your Bitcoin is gone forever. there are millions of BTC that are permanently lost this way. Now, you can use centralized exchanges, like Coinbase. But that means trusting a third party, and history has shown those can fail too. If you're not tech-savvy, Bitcoin can feel intimidating, even risky. It's like being your own bank, awesome, but stressful if you're not ready. Con number 4, regulatory uncertainty. Let's be real, governments don't like things they can't control. And Bitcoin exists outside the traditional system, which makes it both powerful and vulnerable to regulatory action. Here's what that could look like. The IRS might crack down harder on crypto profits. The SEC could restrict access to exchanges or DeFi tools. Congress could pass new laws that slow adoption or increase reporting requirements. Even if you're fully compliant and legal, the rules keep changing. And around the world, we've already seen China banning Bitcoin mining, India proposing high crypto taxes, the EU debating strict wallet regulations. So, while Bitcoin is technically decentralized, the reality is governments still influence how easy it is to use. And that uncertainty can scare off bigger investors, especially institutions and retirees. Con number 5, not yet fully adopted. Bitcoin is still early. It's growing fast, but we're not at mass adoption yet. Most people don't understand how it works, don't trust it yet, or don't know how to use it in real life. Even though Bitcoin's market cap is in the trillions, it's tiny compared to real estate, gold, stocks and bonds. And try using it in daily life? Still hard. You can't pay your mortgage in Bitcoin. Most businesses don't accept it. It's not integrated into the average bank or financial plan. So while Bitcoin might be the future, it's not the present for most people. You're not buying a mature asset. You're buying into a movement, one that's still being built. All right. Bitcoin is powerful, but it's not easy. It tests your emotions, your patience, and your tech comfort. So, how do you choose between the old, reliable real estate and the new frontier, Bitcoin? The verdict: Bitcoin versus real estate. Two very different assets, two very different playbooks. But at the end of the day, this isn't just about which is better. It's about what fits your goals, your mindset, and the world we're heading into. Let's put them side by side, head to head, and help you decide. Real estate, the classic wealth builder. Pros: generates monthly income through rent. Time-tested stability, people always need housing. Massive tax advantages, depreciation, 1031 exchange, mortgage interest write-offs. Leverage-friendly, banks will lend you money to buy more. Builds equity over time with tenants paying the mortgage. Cons: high upfront cost, often 6 figures or more. Illiquid, can take weeks or months to sell. Tied to local markets, can crash like 2008. Tenants, toilets, and property headaches. Government controls the rules, zoning, taxes, regulations. Real estate built the American dream. It's solid, predictable, and bank-approved. But it moves slow and it doesn't play well in a fast, digital-first world. Bitcoin, the digital wildcard. Pros: borderless and decentralized, no banks or middlemen. Ultra scarce, only 21 million will ever exist. Easy to buy, sell, and store 24/7 market. Accessible to anyone with a phone and internet. Huge upside as global adoption grows. Cons: highly volatile, big price swings. No cash flow or income unless you take extra risk. Steep learning curve for custody and security. Legal and tax rules still evolving. Still early in adoption, not yet mainstream. Bitcoin is a revolution not just in money, but in ownership, freedom, and how we store value. But it demands conviction, patience, and education. You're not just buying an asset, you're joining a movement. So, which one wins? Here's the truth. If you want stable income, long-term leverage, and tax perks, real estate is hard to beat. But if you want digital freedom, long-term upside, and global potential, Bitcoin opens doors real estate never could. The smartest investors? They're studying both. Some are selling rentals to buy Bitcoin. Others are borrowing against crypto to buy homes. You don't have to choose one side. You just have to understand both and know which tool is right for the world you believe is coming. Because the future doesn't belong to those who follow old rules blindly. It belongs to those who ask questions, who adapt, and who knows what's really happening with their money. Knowledge is power, and now that power is in your hands. If you got value from this video, hit like, smash that subscribe button, and drop a comment. Stay tuned, stay sharp, and stay free. So hit that subscribe button, and we'll see you at the next video.